So, good morning and welcome to our webinar today. I can see all of our participants are joining us, so we'll just give them a few seconds. They're streaming in, which is a delight to see. It's wonderful that so many of you are interested in moving to Portugal, and we're here to help. So, welcome to our webinar. Today, we're going to be talking about planning your tax and pensions before leaving the UK for Portugal, okay? Now, obviously today is Wednesday, the 14th of July. My name is Christina Hippisley, and I'm the General Manager of the Portuguese Chamber of Commerce in the UK. And throughout the year, we run our Moving to Portugal events. Now, they're live and they're virtual. Obviously, today is a virtual event. And we run them in the UK, in London and around the country. And our aim is to help you all find out more about how to move to Portugal. Now, over 6,000 people have attended our live events so far. It's quite a lot of people in about 3 years. And our database is growing all the time. There's a huge appetite among the Brits to move to Portugal for all the reasons. I'm sure you all know why, because that's why you're here on the webinar. So over this period, since we've been doing the Moving to Portugal events, we've learned a great deal about the sort of questions that you all want to know the answers to. We have a library of webinars that we've already done on the movingtoportugal.org.uk website, and do have a look there. And we'll be covering more topics like today's topic in the coming weeks. So stay tuned, register on the movingtoportugal.org.uk website, and we'll keep you up to date with any of our upcoming events, our live events and our virtual events. And we also send regular newsletters. Now, just before I introduce our guest, a couple of housekeeping points. We expect this webinar to last no more than 30 minutes. We are going to do a question and answer session between me and our guest, Daniel, and then we'll take questions from the audience. And obviously, we'll take several questions from the audience straight after Dan and I have finished our chat. So please put any questions in the chat box, as you can see here on the screen, or in the questions box, and then I will ask Dan those questions once I've asked him some questions of my own. Now, as you can imagine, one of the most frequent questions we get asked here at the Chamber of Commerce is, how can you prepare financially for your permanent move to Portugal? How can you avoid expensive mistakes and make sure that the taxmen in both the UK and Portugal are happy, because otherwise there could be trouble. So we assume the reason you're here in the webinar today is because you want to make your move to Portugal as financially smooth as possible. Okay, so today the Chamber has invited Daniel Henderson. Now, Dan is the Algarve and Southern Portugal partner for Blevins Franks. Blevins Franks are long-standing members of the Portuguese Chamber of Commerce here in the UK, and Blevins Franks are Europe's leading international financial planning business, and they specialise in advising British expats moving all over the world. But today we're talking about Portugal. Now, a short intro about Dan, because he won't tell you, so I will. Dan joined Blevins Franks in Portugal, so he lives in Portugal, in 2014. Now, Dan, despite his youthful looks, has 21 years worth of wealth management, retirement and estate planning under his belt. And Dan has lots of the relevant qualifications. He holds the Diploma for Financial Advisors. He has advanced qualifications in pensions and investment planning from the Chartered Insurance Institute. He's also a member of the Personal Finance Society. Now, obviously, Dan is an expatriate himself. He lives in Portugal. He understands the tax regime in Portugal and, very importantly, its interaction with UK legislation and regulations, which is a bit of a minefield, as you can imagine. Now, behind Dan, he has a large team of dedicated specialists in the Blevins Franks offices. These are specialists in pensions, investments, tax and client service. They work out of offices in London, in Malta and in Portugal, obviously. Dan is also an advisor for Blevins Franks Wealth Management Limited, which is registered with the Malta Financial Services Authority. And I've told you a little bit about Dan now. There's a few other things I'll tell you, like he's a great golfer, but we'll come to that later. Now, Dan, I've explained to people your qualifications, that goes without saying, but tell us a little bit about Blevins Franks and its Portugal operations and what you all do there.
Okay. Well, Christina, thanks for that introduction. You've looked, so I don't know where that came from, but anyway, a great pleasure to be here this morning, and thanks to the Portuguese Chamber of Commerce for the opportunity to be here. In terms of what Blevins Franks do, I always describe it as twofold, really. So we're very much tax-led in the sense that anybody considering the move from the UK to Portugal, we effectively draw the sort of tax and financial planning roadmap, so they can sequence their move out of Portugal as efficiently as possible, out of the UK as efficiently as possible, make sure they don't trip up with any residency rules, tax planning on the way out. And then once they transition that move to Portugal and land in Portugal as a resident, we're here to give the ongoing tax and investment planning advice.
Okay, Dan, right, so that's good. So you're obviously the right man to take questions from our audience who are already piling in with the questions. Before we take the questions from the audience, I'm just going to ask you a few questions, which I know are among the most common that you get. So when we move to our discussion points, could I ask you firstly, Dan, after this slide, we have the discussion points. Dan, what's the first question you need people to think about before they move to Portugal? Is it what their motivation is? Tell us a little bit about that question.
Yeah, it's a really good question, because when I'm speaking to people that are considering a move for the first time, I really want to understand more about their situation, but really their motivation for the move. Is it more about the lifestyle that Portugal's got to offer? You know, the sea, the sun, the sand, the golf, the tennis, the fantastic outdoor lifestyle that we enjoy here. So is it more driven by that, or is it more by the attractive tax advantages? And the reason it's really important for me to understand that is that if it's lifestyle driven, it suggests that that individual couple or family really want to spend the majority of their time in Portugal. And that means that they'll likely be considered Portuguese tax resident and not UK tax resident. And that's really important. The second point is that, so if it's more tax driven, what I tend to find is that that comes with some compromises, because if it is about the tax, whilst they might understand the residency rules in Portugal, for example, 6 months, a year, do they understand what it means from a UK point of view? So how can they make sure they've exited the UK? And if they're looking more for the tax and not the lifestyle, it always suggests to me that they actually want to spend more time back in the UK and actually not escape the UK tax net. So it's one of the first questions that I like to ask, and it really helps me with the subsequent discussion.
Okay, right. Now you've opened up a very interesting point here, which I can see our audience are very interested in, given the questions that are coming in. Tell us a little bit about the residency rules, leaving the UK and arriving in Portugal, because I know this is really a crucial matter to get right, isn't it?
It really is. It really is. And the UK, in a way, have made our life easier. So in 2013, they published their statutory residence test. And if you're an insomniac, it's a good 105-page read on the Revenue and Customs website. We've simplified it very much. But in order to benefit from the tax advantages in Portugal, you have to have left the UK tax system. So often we're looking at the different ties and connections that an individual will have with the UK. And that dictates how much time they can spend back in the UK without continuing to be considered resident there, tax resident there. So in most cases, if you're leaving the UK, you'll find that individuals have got 2 ties. And under the statutory residence test as a leaver, it means they can't spend any more than 90 midnights back in the UK for the first couple of years. It does extend after that point to 120, even 182 days. So the flexibility does increase to spend more time back in the UK. But obviously, to benefit from some of the advantages that we're going to talk about today, they need to have left the UK tax system. Okay, so that's crucial. Yeah. You're touching, again, you're opening up another very important point, which is the tax planning opportunities in Portugal. Now, here in the UK, partly through our Moving to Portugal events, but partly because of a very successful campaign of awareness that's being driven here in the UK. Lots and lots of people in the UK already know about Portugal's very benign or attractive non-habitual residence tax regime. Here in London and around the country, I get asked about it all the time.
I know it started in 2012. We know a lot about it here at the Chamber, but tell us a little bit, Dan, about what are the tax planning opportunities? What are the key advantages of the non-habitual residence tax regime in Portugal, and how can people benefit?
Yeah, I think before we touch on NHR, what I'd say is that whenever you're moving from one tax jurisdiction to another, there are always planning opportunities. So it's important to obviously assess that from a UK perspective initially. So if you're leaving the UK, it's important that you use various allowances. It's important that you've got your assets in the right place before you move, because if they're in the wrong place and the tax consequences are such that you can't benefit under NHR, then arguably a trick has been missed. So typically, whenever you're moving from one jurisdiction to another, there are going to be opportunities to enjoy. And the trouble is, there's a lot of what I describe as free advice, coffee talk at the golf club, free advice in terms of what you should do before you move. And the danger in that is that you do something that you think is right, and actually it doesn't fit your circumstances. And I had a case in point just a couple of days ago. I met a gentleman who's moved out here to Portugal under the NHR regime. So he's got his D7 visa, he's got his NHR all sorted. And we were discussing his financial situation. He said, well, I've got a pension in the UK, actually a fairly sizable pension, and he had taken his pension commencement lump sum before he left the UK, which is typically very good planning, because he realised that if he did that in Portugal, he'd face a 10% tax charge. So he thought, well, I'll take it while I'm in the UK, no problem. But when we explored that in a bit more detail, i.e. what his motivations were for the capital that he'd taken out, he said, well, I actually don't need it. My plan is to pass that on to my kids, my grandkids. So looking at that, on the surface, it seemed like good planning because he avoided the 10%, but actually he's brought it out of a highly tax efficient pension environment into his estate. So down the road, there could potentially be a 40% tax consequence. So that's a really simple, I suppose, example of where doing what you think might be the right thing based on what you've heard can actually be the wrong thing in your particular situation.
Are there any other big benefits of the NHR regime? Obviously, it's beneficial for pensions. There's lots of tax planning opportunities as well, are there, around capital gains and things like that?
Yeah, so the cross-border tax advice is one part, and then obviously there's this non-habitual resident regime, which actually started in Portugal back in 2009, and it's been obviously very, very successful in terms of attracting people into Portugal with various tax advantages that it offers. But in order to benefit, as I said before, you need to make sure that your assets are in the right situation to benefit. Now, the basic premise of NHR is that if an income or capital gains tax event, if it's taxed or taxable at source, it means that under NHR, it'll either be exempt, or in the case of pensions, there'll be a flat rate of 10% tax applied. So there are some really good planning opportunities around, obviously, pensions, UK dividends, property, so capital gains tax on second homes or buy-to-let portfolios in the UK. There's some really good planning opportunities there as well. So NHR has been a tremendous success for Portugal, and obviously a lot of our clients have enjoyed what it's had to offer.
We should add that this is for people who are going to permanently go and live in Portugal. So you have to leave the UK and go become tax resident in Portugal, but a great many of you want to do that. So I don't think that's going to be a problem. Okay, Dan, now that's leading us in, just before we take questions from our audience, which are flooding in, just tell us a little bit about your views of pensions. So how do you evaluate whether someone's pension is suitable and how might they benefit?
Yeah, so it's not a case of one size fits all with a pension, and there are many, many different types of pensions around. So whether it's a final salary scheme, a defined contribution scheme, a SIP, a SAS, a CUROPS, there's many different types of pensions. Quite a few of our clients have worked in local government, so have local government pensions. The issue there is that there are some pensions that are always going to be taxed at source, taxed in the UK. And if they're always taxed at source, that obviously renders the benefits of NHR somewhat redundant because there's withholding tax in the UK. But for people that do have other types of pension, it does provide fantastic opportunities. So as a non-resident in the UK, you can claim a nil tax code, which means you can have gross payments from the UK and obviously just a 10% flat rate of tax in Portugal. And I had a gentleman, one of my clients, so he moved to Portugal under NHR. And his key concern actually was about what's happening in the UK. If he's leaving the UK, Does he really want to leave his valuable pension asset behind and subject to potential UK taxation? He also had some concerns around what we call the lifetime allowance charge and currency as well, because he's moving to Portugal. All his liabilities are going to be occurring in euros. So he wanted to match up his pension with where his liabilities were occurring. So for this particular gentleman, what we did is we considered a transfer to a QROPS, qualified recognised overseas pension scheme. And that achieved for him three things. So one, it extracted the asset from the UK. So there's no further scope for tax from the UK on the basis he remains non-resident. Secondly, a transfer to QROPS is what's called a benefit crystallisation event. A benefit crystallisation event means that your fund is tested against the lifetime allowance at that point and not again. So what we're able to do is to cap his lifetime allowance liabilities. So that was a big win for him. And then thirdly, obviously the currency situation. So we've invested in a euro portfolio. So the income that naturally is produced is in euros, it matches up with his liabilities. And I suppose the fourth point is that he's dealing with a regulated firm in the country in which he's living, which I think is a really important point as well.
Yeah, for sure. Okay, just before we start taking questions from our audience, just give us your potted wisdom, if you like. What are the main, what's your summary of what people should remember before or while they're planning to relocate to Portugal? What are the financial watch points?
Yeah, there's the financial watch points. There's also the lifestyle watch points for me as well. I mean, I've been here for 8 years now, and one of the beauties of Portugal and the Algarve where we live, we've got fantastic connections with those different people, whether it's golf clubs, tennis clubs. So whatever it might be that sort of floats an individual's boat, we're bound to have connections in those areas. So one of the really enjoyable parts is being able to introduce our clients to the right people to actually enjoy and optimize their lifestyle, which is great. And then obviously we're talking about tax today. What I'd say is that simply get advice, whether it's from us or anybody else, please get advice. Don't trip up on the way out of the UK. Make sure that you can optimize the tax planning opportunities that are there. We have at Blevins Franks our tax advisory service, so based in St James's Square in London, and they're our in-house team of cross-border tax and legal specialists. And I work very closely with them in terms of sitting down with the client initially, understanding all about their situation, financial situation, plans to move to Portugal. And arm in arm with our tax advisory service, we put together a tax report which basically sequences the move out of the UK, optimises all the planning opportunities. And then obviously when they land in Portugal, we're here to carry on with that tax and investment planning journey. Okay,
so anybody interested can talk to people in London who are tied in closely with you guys in Portugal as well before they make any big decisions. Okay, so now we're going to start taking questions from our audience. Just to be clear, Dan, I know you're more than happy to, after this seminar finishes, to talk to people directly. We're going to put up your contact details now. Just tell us a little bit about how you do it. Do you have a chat with people at no cost in order to see if your services can really benefit them? How does it work?
Yeah, so we need to understand obviously more about who we're talking with, we need to understand their situation. They need to understand exactly what we do. Hopefully the chat today has helped identify those points. But what we'll do is we'll have a chat either virtually on the phone, if they're in Portugal, obviously face-to-face or mask-to-mask meetings. Yeah, we're a face-to-face business, so we really enjoy that client contact. But so we're very happy to have those initial conversations just to establish if we're the right fit for that particular individual or family, and bluntly, if they're the right fit for us as well. So no cost or obligation for those conversations. Please feel free to get in touch and we can establish if there is the appropriate fit. Okay, now we're going to move to the next slide with contact details. And we're going to start taking some questions from our audience. Thank you, audience, for your patience. Right. We have a question from Ronan Fox. Actually, Dan, this is a good one. Is there an optimal month for moving to Portugal from the UK from a tax planning point of view? It's a really good question. And again, I hate to go back to it, is based on individual circumstances. Portugal does split the tax year, which means that from the date that you arrive, you can effectively be treated as tax resident here. But much depends on, again, the jurisdiction you're leaving. I'm assuming Ronan's leaving the UK. So much depends on his situation. What we tend to find is that a lot of people like to almost clear out one UK tax year before they make the move. So it's quite common, March, April time, they clear out the UK tax year and then they move to Portugal. And because Portugal splits the tax year, they just pay tax from that point onwards in Portugal. But it's a really good question based on potential tax planning opportunities with split year treatment, but one that obviously we could discuss in a bit more detail.
Okay, I've got Paul Lilly asking, this is an interesting question, capital gains tax on UK property after Paul becomes tax resident in Portugal. What are the rates and how would it work?
Yeah, so UK property, if it's still sold within 9 months of it being your principal primary residence, then it can still qualify for the exemption on capital gains if it's your principal residence that's being sold. If it's a second home, George Osborne did us a bit of a favour actually. So in 2015, he introduced capital gains tax for non-residents. I don't know if anybody remembers when the London property market was being a bit overheated with international investment. The UK had no tax take. So George Osborne introduced capital gains tax for non-residents. And that's actually quite important because it now means that UK property is taxed at source, which means in Portugal, under NHR, it's exempt. But you'd still have to pay the gain in the UK from the 6th of April 2015 to the point at which you sell.
Okay.
So there are, if you've held a property, UK property for a reasonable period before 2015, the chances are the bulk of the appreciation would have been prior to that. So it does provide a useful planning opportunity.
Okay. Right, I've got one question here from Clive Gardner. When in the D7 visa process, does the tax residency need to change from the UK to Portugal? Yes, quite a technical question. I don't know.
Yeah, a little bit. So obviously the process in the UK that you have to go through with the consulate in Portugal and then the consulate in the UK and then CEF here in Portugal. But it's basically the date that you land, well, that you take your residency actually up in Portugal. So there'll be a residency certificate and it's from that point in time that tax residency effectively takes over in Portugal.
Okay, right. Okay, this is an interesting one. Mark Punter is asking, how is UK income from investments, particularly ISAs and UK property? So if you're getting income from ISAs and UK property and you're living in Portugal, how is that treated tax-wise?
If we look at property first, so property is a situ asset in the UK. And like most tax jurisdictions, if you've got a situ asset like property, it'll always be taxed at source. So if you're a non-resident, you claim what's called a non-resident landlord, and you'll pay tax at source. You'll still have your personal allowances, which will absorb some of the income tax consequence. Because it's taxed at source, it means there's no further tax to pay in Portugal under NHR. With regards to ISAs, it's a really good question, commonly asked, because ISAs are a fantastic lifetime investment planning tool as a UK resident, but not so effective in Portugal. So there's some planning opportunities around ISAs, whether you sort of bed and breakfast before you leave the UK and wash out the gains. If you retain them, the capital gains will be taxable in Portugal, even under NHR. And the reason for that is if we look at the tax treaty, capital gains, it says, I quote because it's boring tax stuff and I want to do it, but it says that the gain passes to the state in which the alienator, i.e. the individual, is resident. So the UK is saying, well, we're not going to tax the gain. So obviously in Portugal, even under NHR, it's still taxable. The interest and dividends are not, and I won't go into technicalities of that because it'll probably bore everybody, but yeah, but the gains are. But going back to earlier in the presentation, it's a really good question because we'd have a discussion about what to do with those ISAs before you leave the UK.
Okay. Now, Craig McKinley is just asking us something. I think we covered it, but this is a key area, so it might just be a very quick summary. So Craig is asking, if I become non-habitually resident, i.e. I live in Portugal under NHR, and then later sell my main residential UK property, is that sale still capital gains tax exempt? You covered that. Perhaps you could just repeat again for Craig.
Yeah, very sure. So if it's sold within 9 months, which I guess is unlikely, if it's ceasing to be your principal residence, then the capital gains exemption will continue. But beyond that, you would have UK capital gains tax to pay on the appreciation in value between the 6th of April 2015 to the point at which you sell. And I can tell you firsthand, because I literally just sold my house in the UK after 8 years of here. And so there are 3 different ways that you can report the gain. So there are ways to mitigate it somewhat, but you will have tax to pay in the UK in that scenario, yes.
Okay. Right. A question here from David Freeman. If I relocate to Portugal and move my pension with me, isn't there a withholding tax that the UK applies when I move my pension? You covered that a little bit earlier, but
yeah, a little bit. Again, it's a really good question. A little bit depends on the type of pension. So if it's a private pension, then you can complete what's called a double tax individual form. That's effectively stamped in Lisbon, sent back to Revenue and Customs, and they will write to your scheme administrator, pension provider, and apply a nil tax code. But we've got to be careful around that. Again, there's so much detail here. It'd be nice to have a conversation with the individual who asked the question. But you should be able to achieve a nil tax code, which means you'd get gross payments from the UK and obviously declare it in Portugal, but just on the 10% rate. Okay.
Right. We're going to keep going. We've got 5 minutes left of the webinar, but we've got some really good questions, so we'll just keep going. Colin Richardson asking, can one transfer a UK SIP that is crystallized to Curops?
Yes. Is a simple answer.
That's a short answer. Okay. So Colin, if you need more, talk to Dan.
Yeah, as I say, we've got to assess everything on an individual's basis. Excuse me, understand fully their situation to establish if that's the right thing to do or not.
Okay.
In a position to be able to give that advice and make sure it matches up with the client's objectives.
Okay. We have a good question from Karim Hemani. Hello, Karim. How are you? To you, Dan. Appreciate you might want to talk to him afterwards. So Karim is asking, on a property I have leased out in the UK, which is giving income over a 15-year period, he's worried about capital gains tax when he sells it. Are there opportunities to mitigate that in Portugal under the NHR?
Yes, if it's a little bit depends on when the property appreciated in value. So the growth in the value of the property from 2015 will still be taxable under capital gains tax rules in the UK, but any growth that in valuation that had been achieved prior to 2015 would effectively be washed out and you wouldn't have to pay the gain there. So what I've seen, I've got a couple of clients who had big buy-to-let portfolios, and with all the changes in the UK, it became less efficient. They'd ridden a good asset class horse for quite a while in the UK property market. So they've moved to Portugal under the NHR regime, and they've systematically sold off the properties. And the only capital gains situation is on the appreciation in value from 2015. So a lot of them that they've held for 20, 30 years, they've hugely reduced their tax bill, because if they did that in the UK, they'd have full CGT to pay.
Okay.
Hopefully that answers the question.
Yeah, very interesting. Okay, got it. A good question here from Alan Blinkhorn. Is dividend income from publicly quoted companies taxed in Portugal if you're living there?
Under NHR, no, you've got the benefit because, yeah, we go into what's called, if you're UK non-resident, you can claim what's called disregarded income treatment, which means that you lose your personal allowance, but allows your dividends to be paid to you gross. Importantly, the UK has the taxing right on the dividend, but under disregarded income rules doesn't tax it. That means that the dividend income is exempt in Portugal. So it's a huge opportunity.
Huge bonus, yeah, absolutely. Yeah. I'd just like to say to Michelle da Silva, who lost connection, and our viewer, Michelle Silva, is asking if you can access, if viewers can access the recording after the webinar. Yes, I'd just like to tell everybody, the recording of this webinar will be live, well, live as in, it'll pass straight over to our movingtoportugal.org.uk website after the seminar's over. And everybody who's registered to attend this webinar will receive an email with the link to that. Plus, hopefully Blevins will also send the link round to everybody. I've got a question here from Chris Morris. Chris Morris is asking, under the NHR, if he's living in Portugal and working as an IT contractor, can he be paid via a Portuguese umbrella company and receive the 20% flat rate of tax?
Yeah, so one of the things we didn't touch on with NHR is that there are certain occupations that fall under a list of special occupations. If you're earning Portuguese source income, it means you could benefit from that. And IT consultants, I believe, are on the list. It's something that we'd have to look at in a bit more detail. But quite often, if you've got an occupation that's not on the list, we'll look at other vehicles that might be efficient. So again, it's a question of probably looking at the individual circumstances in a bit more detail. But I'll suggest that there could be some useful planning opportunities there, yes.
Okay. Now, a question from Francis Rubin. Francis is asking, as I understand, the NHR is no longer available to UK citizens. Francis, that's not correct. The UK is no longer in Europe, so we are effectively a third party or third country, but that doesn't stop us, assuming we sort out our residency applications. Residency is one thing, tax treatment is another. I'm right, aren't I, Dan? That
yeah, you are absolutely. I mean, NHR wasn't affected by Brexit in any way, shape, or form, so it still continues and it's still available. One thing Brexit has done is made the residency process a little bit more complicated, because obviously we're not moving from one EU member state to another. So what's important to understand is what visa is appropriate for the individual looking to move to secure their residency. But once they've done that, NHR is still absolutely available.
Okay. And we've just got a question about where Blevins Franks is regulated. Now, obviously, you're regulated in Malta. And how does the regulation system work in Portugal?
Yeah, so with the changes in Brexit, it's one of the things that we obviously had to look at with the changes in regulation. So we have obviously our UK registered company, which is registered under the FCA. And then throughout Europe, we're registered under the Maltese Financial Services Authority, so the MFSA. So we're all appropriately regulated in the jurisdictions in which we exist.
Okay. Right, we're going to take a few more questions. We've got a question here from Eugene Popov. Are SIPs generally suitable or advisable for transfer under the NHR? If so, should we withdraw the entire lump sum once we've got NHR status, but before moving to Portugal?
Yeah, it's a big question. One of the implications of drawing the whole fund down, which is perfectly possible if you're in the right contract, obviously from a tax planning point of view, it brings the whole asset into your estate, which might not be ideal. And also, the UK does have general anti-avoidance provisions. So in a situation where you left the UK and you drew down, I'm going to term aggressively on your pension fund, and had to go back within a 5-year period, the UK would say, actually, you didn't leave for lifestyle purposes, you just left to avoid paying tax. Therefore, we will tax you on your return to Portugal. So what I typically advise my clients is that even where there is the flexibility to do that, just be careful within that first 5 years of anti-avoidance, because if for some reason you do have to return to the UK, you don't want to do that and find a massive tax bill when you get back. So it's a really good question. I would suggest we'd draw up a strategic financial plan for somebody in that situation and work out what's the best fit for them.
Okay, got a good question here from Milan Milinovic. Hello, Milan. What is the inheritance tax position if you move to Portugal?
That's another really great question. So Portugal doesn't have inheritance tax. It has stamp duty, but that only applies to gifts made on death to non-family members in effect. But, and there is a but, the UK has this domicile. So domicile is then crucial. Everybody has a domicile from a UK point of view that follows their father. So domicile of origin might be in the UK. If you move to Portugal and want to spend the rest of your time there, your domicile of origin can be superseded by a domicile of choice, i.e. Portugal. And that is significant from a UK inheritance tax point of view, because if your domicile position has moved, it'll then only be UK situ assets that are subject to UK inheritance tax. So whilst there's no inheritance tax in Portugal, domicile is absolutely crucial to make sure you can avoid it completely. And it's a massive part of the work that we carry out with our obviously high net worth families.
Okay. Amazing. Okay, right. Another good question. We'll keep going for a couple more minutes. Trevor Webster is saying, my assets are in Guernsey and the Isle of Man via portfolio bonds. Income drawdown in these jurisdictions is free of withholding tax. What's the situation if I become a resident of Portugal? I left the UK and I now reside in Japan. Maybe that's too technical for.
Yeah, I mean, the bonds have their own tax treatment in Portugal. The situation there is that a couple of those jurisdictions are on what's called the blacklist of tax havens from Portugal. So it means that their tax treatment will be less advantageous in Portugal. But nonetheless, if the vehicle still could work, it's just understanding if there's a better solution for that particular situation.
Okay, last couple of questions. David Whittle, could Daniel please confirm that income from buy-to-let properties in the UK will still be taxed in the UK, even if he's living in Portugal under the NHR regime?
I can confirm that is the case. Yeah, that's absolutely right. So because it's a situ asset in the UK, you'll always pay tax on income arising from property. I have to do it myself, I'm afraid. So
okay, so you learn the painful truth yourself.
Yeah,
right.
Exactly.
Right. I've got a question here from Jeremy Parsons. Jeremy noted Dan's advice on bed and breakfasting ISIS before leaving the UK. He's got a question. Do share capital gains taxes reduce over time in Portugal under NHR, or are all taxes due in the year that they are sold?
Yeah, that is a big question, good technical question. I like it. There is indexation relief available in Portugal, but it's obviously only available from the time that you become resident in Portugal, in effect. So again, it's a situation of assessing whether it's better to sell some or before. It's good that it picked up on the bed and breakfasting idea and realising those gains while still UK resident. So definitely on the right path. It's just understanding how to optimize the overall position with the other investment portfolio. Okay.
Right. We're just going to take, goodness, we've got loads of questions. Right. Okay. Just picking a good question here. We've got some really technical ones. Right. I've got a question here from Luca Faccioviana. Luis. Luis is currently living in the UK. He's double nationality, Portuguese, UK. He's moving to Florida and he's expecting a liquidity event, which I think is the modern phrase for realizing a gain or selling something. After which he wants to return to Portugal, but minimize his capital gains tax. Can Blevins help with forward planning such events?
The answer is possibly. When you throw the US into the mix, it always becomes a bit more complicated. It's not a jurisdiction that we deal with. So I'd have to have a chat with, is it Luis?
Yes, with Luis Faccioviana. Yeah.
Yeah, I need to understand a little bit more about the liquidity event and how it works, where it's actually happening, and the timing of it. So I'm sorry for the really general answer, but
I think, Dan, I'd like a liquidity event. You'd like some liquidity events as well, wouldn't you?
They sound great. Yeah, absolutely.
I think we should organise liquidity events rather than normal events. Right. Okay. Last question, I think, ladies and gentlemen, since we're overrunning. Jonathan Tanner. Jonathan has recently managed to get Portuguese citizenship through a family connection, and he's planning to move to Portugal permanently in 2022. Does having citizenship make getting residency easier? Tax residency, presumably he means, because he's got citizenship. Oh, well, Jonathan, sorry, that's a slightly, it's not really a tax question, so I'm not sure it's one that me or Dan want to answer. It's more about citizenship, but you would. I'd suggest if
you've got citizenship, then I think residency will be the process will be far more straightforward. So I don't know if it'd require any visa. It's probably just a question of registering with finances and taking the NHR. So yeah, I think that.
Okay. I should add, just before we take the last question, Dan's very happy to answer any questions after or set up a session with you. His contact details are here on the screen. We're going to take the last question from Stephen White. Stephen, thank you for your question. Stephen regularly trades shares using an account based in the UK. Once he moves to Portugal under the NHR, will he be taxed at 28% on those gains in Portugal? And will he still be taxed at 20% in the UK?
No, so as a tax resident in Portugal, the declaration will happen in Portugal, and unfortunately, with gains it will be 28%. Shares fall under what we call movable assets, and as such, the capital gain unfortunately will have to be settled in Portugal at the rate of 28% on realised gains, which hopefully Stephen achieves.
But he won't pay anything in the UK.
No.
Oh, okay. Right, ladies and gentlemen, we're going to have to stop it there. Thank you so much. It's been a wonderful audience. We've had some great questions. Absolutely fantastic. It is all we've got time for. The recording of the webinar will be almost immediately available. We just got to cut and paste it and do some technical stuff to it, but it'll be available very shortly. Many, many thanks to our speaker and our guest, Daniel Henderson from Blevins Franks. Our next live Moving to Portugal show and seminars will, God willing, COVID willing, everything else willing, be in late October in central London. Come and meet Dan and his team from Blevins Franks, plus all our other chamber members. Talk to them one-to-one with all your questions. Make sure you register with us at movingtoportugal.org.uk, and let's all move to Portugal. Thank you very much.
Great.